Let's start with Bernanke's decision last night, of course, coming out saying there's significant risks to the economy now and announcing the much anticipated Operation Twist. Do you think this is enough for the market?
I think that the market was expecting Operation Twist, looking for shorter duration bonds to be swapped into longer duration bonds. What was interesting is that they did mention that they want to keep the mortgage sector less under pressure, so to keep the rates low in that area to support the consumer. Obviously, the headwinds facing global growth mentioned as well with regards to the Eurozone will definitely be something that we'll hear today in our MPC, and I think that this is a global backdrop issue. Obviously, with the developed world being under much more severe debt crisis than we are locally, it's something that they talk about much more relevantly, and how they're going to fund that sort of debt, as well as the fact that it's posing austerity measures. It means that there's budget cuts, etc., and what that constraint is on the consumer who's trying to control debt levels.
Now, the rand, along with Brazil's real, had the largest daily loss since the onset of the financial crisis, down 8.5% yesterday, R8.18 as it stands at midday today. Where do you think the rand's going from here? Are we due for some more weakness, or is this overdone?
I think we're due for some more weakness. We've unfortunately breached that 3-year bull run that we saw that kind of topped up at around that 752, 58 level. Unfortunately, once we broke through that, it rallied quite hard and quite quickly. The move that we've seen this week, really seeing it break through that 8 overnight on the back of what happened with FOMC, as well as the fact that we're seeing a lot of concerns around liquidity in the developed world. The liquidity issues are then seeing unbundling of emerging markets, repatriation back on shore, cross-border lending issues, and those are resulting in emerging markets taking the brunt of this risk aversion, which ultimately equates to the likes of Mexico, the ruble, being the Russian ruble, being the Brazilian real, etc., seeing the brunt of that move, as well as South Africa. The only currency that's managed to remain relatively unscathed has been the Turkish lira, purely because they were upgraded this week in terms of becoming an investment grade. So now, from that perspective, it's protected them.
When we look at the bond market, foreigners were net sellers of 1.8 billion rand worth of bonds yesterday. Apart from being net buyers of bonds on Tuesday, there's been this kind of volatility when it comes to the bond market, but overall we've been selling off, and that's of course why we've seen the rand fall. What's taking place when it comes to yields on the bond market?
Well, I think it's twofold. I think one, as we mentioned before, the repatriation of funds as liquidity issues become a concern in those developed offshore nations, which obviously means that some of the bonds that they're holding on to will be resolved and back into onshore assets. But more importantly, I think what we've also seen is with this rand move that we've eroded in the value of the carry trade, you've also seen some selling from the offshore markets, because that carry trade isn't as valuable as it was potentially sub-7. So, you've got that twofold move. Obviously, MPC today really being the big one. We're not seeing a lot of local flow today. Just ahead of that, I think a lot of guys are already positioned. Offshore market also watching out to see what the decision's going to be, how hawkish they're going to be around inflation, but then obviously the dovishness and the concerns around growth, and how we potentially as a South African MPC can combat that with regards to what other central banks are doing globally.
How might the plummeting rand change Marcus's rate outlook going forward and outlook for inflation?
Well, I think it's definitely placed pressure on the upside. I mean, yesterday we printed relatively low compared to the consensus, so we printed 5.3 versus 5.5. A sigh of relief breathed, but I think that food pressures, unfortunately, with oil remaining level at the current levels, still with rand a lot weaker, poses that upside. Imported cost pressures, as well as the fact that we've got administered prices. So inflation will be mentioned today, definitely with the likes of the rand weakening so significantly. And if it remains this week and remains in weaker bands, it obviously poses that upside pressure on that inflation number.
Apart from the MPC today, what event risk might swing sentiment today in the markets and perhaps affect where the rand goes?
Well, I think we've seen a large proportion of that already come through. We had the BOE statement come out, which was with regards to their monetary policy meeting, stating that they're potentially going to look for doing some form of QE in November, creating some form of liquidity. We've seen the ECB continue to back the Eurozone, as well as FOMC confirming that they're doing Operation Twist, as well as protecting the mortgage sector. So those three major decisions have been the big drivers, and then obviously the local MPC today should give us a clear indication. But I think underlying all of that The concerns for global growth really are paramount, and unfortunately, as consumers try to service high debt levels, it continues to become a problem because the consumer is not coming back online in terms of spending and growing economies. So from that perspective, locally inflation will be something that will be mentioned, and we expect interest rates to remain flat in this decision.
That's what most are saying, but there are some who are saying that when we look at the bond market, there have been some participants who've been pricing in a rate cut, but of course, at this stage where the economy is with regards to inflation, when we saw those CPI numbers coming out, also retail sales, which weren't as bad as were expected, rate cut is just really not an option at this stage.
I don't think so. I think that at this point in time, we must remember that MPC ultimately is an inflation targeting MPC. As much as growth is an issue, it's really it's a global issue. It's not something that's just something in South Africa that we're seeing. And unfortunately, what's unfolding on the currency is not necessarily going to pose downside risk to inflation. It's going to pose upside risks. So I think for now we'll see interest rates remaining flat. At Nedbank we're calling flat rates until at least the second quarter, if not the second half of next year.